If you always find yourself on the wrong side of the market, then this is a perfect video for you, because euro dollar today had a really great setup right here where it really identifies why following continuations and identifying the proper trend is important, and staying with the trend can help you get into proper positions. This trade went on for 1 to 12. I'm just going to kind of share with you and break down my analysis of what happened and why I think it was a good trade, and why I think a lot of people end up on the wrong side of the market, and they end up getting caught out and drawing structure in the wrong way. So I'm going to give you a simple system that I follow for actually drawing market structure and not getting lost. So I'm going to start on the daily. And so what you're going to see is I already have it drawn out to kind of save some time. So basically, what I noticed was on the daily, we started having this downtrend, right? So you're starting to see like lower low, lower high, lower low, lower high, lower low, lower high, lower low. And so one of the things that I saw was that price was bearish, right? So obviously price is bearish. And I was looking for, okay, well, what's the next likely thing to happen? If this trend is to continue, right? If we're continuing lower low, lower high, lower low, and we're at this part in the sequence, right? We're around here. What do you think is the next likely thing to happen? Either we're going to come back higher to an order block here, which is what I had marked in here, or we're going to start dropping now. And so I was trying to play this idea of price going lower. So if you look at that, and then we drop to the 4 hour, after seeing that price is bearish, this is where I'll kind of break into the lesson that's more interesting, that's kind of a little bit helpful for people. So one of the things that I found was, at the moment, I think price is bullish on the 4 hour, right? And so the expectation is that price is going to want to continue higher, correct? But one of the things was I had this level marked out, and I saw that we weren't really making a lot of progress. And what I noticed was that price really wanted to come lower to this origin, because a lot of times price will like to return to the origin of things, the origin of the move. And so one of the ways to draw structure is, if you look left, you can see, okay, lower low, lower high. And what you'll see is we get a break of structure here, right? So this is your low, we break. And this is the thing that I was going to share. So basically, this is your new low. So then where is your new high? Some people get lost and they'll be like, okay, maybe it's here, or maybe it's here. And how do you know which one it is? And so what I typically do is I'll find the point where we broke. So this is the lowest point. I'll draw a line, and then I'll find my new low. I'll draw 2 lines, and I'll basically say, where's the highest point? Because that's where the true structure break was caused from. The true origin of the move was here. And that's why I have that blue dot there. So, and then what we see is another break, right? And one of the things I like to look for is a candle break. So it needs to break with a candle. It cannot just be a wick, because what happens is you'll find that sometimes price will do this, right? And then we'll come in like wick the low, which is really just BFIs or smart money grabbing liquidity to then fuel a move to the upside. And so I want to see a candle closure before I confirm. So once we close, then I'm like, okay, is this my high? Is this my high? Or is this my high? Well, again, you draw the 2 lines. Where's the highest point? Where's the origin of the move? Is here. So that's going to be your high. And this is denoted by these blue dots. So you see we get a 4 hour break structure. Again, same thing. This is your high. So where's your low? It's going to be here. It's not here. It's not here. And this is what I'm saying. A lot of people get caught out and they're thinking, okay, price went bearish here. So now they're looking for sells, right? They might look for sells from here. And then price just blows right through it. And then same thing. So the price goes higher. We come back. We see higher high. And then what happens is price comes into this zone. It doesn't break the high. So when we don't break the high, what's the expectation? Well, the expectation is that if we don't break the high, right, a proper trend following system should do this. If we don't break the high and we do this, then what's the likely thing that's going to happen? This level is likely weak, and then we're going to come back to the origin of the move and go higher, or it's going to be a reversal and it's going to start moving down. So what I noticed was, okay, Well, price is really aggressive. That was the first thing I noticed upon waking is price is really aggressive. That's a big sign to me. So we failed to break the low. So I knew this low was probably going to get ran. So I put this as liquidity. And I knew that we were likely going to come down here. So I paid attention to that. And then I went to the 15-minute. And this is, again, what I was sharing. So basically, what you see is this is your high and this is your low. We break to the downside, and then this is my low and this is my high. So this is the current range that we're trading in. So what's the next likely thing we're going to do is head lower, right, to continue the trend, which lines up with the 4-hour wanting to come lower into this block to then go higher. So you're playing the understanding, and you're also playing the understanding that the daily could see more of a pullback or the daily could just drop. So you're playing a lot of these, you're kind of weaving the things together, and that's the key. So what I had was this 15-minute order block here, right? And what I was saying earlier is a lot of people get caught out because what they'll see is, okay, price came up. They might say, oh, well, this is my 15-minute high, and now we're bullish. Or, okay, we broke here. So now they're like, okay, now I'm looking for longs. And this is where you get caught out because in reality, the trend is bearish if you look here. And so when you're looking for price to come in here, you're looking to go short. But a lot of people get caught out because they'll see, okay, price is pretty aggressive. And they're like, okay, it broke this high. And that's why I think using this system to follow the trend is important. And so if you drop to the 1 minute, actually the 5 minutes a little bit more clear. So what you'll see is price comes in here. And these blue ones are just inside bars, by the way. It's a bar inside of the other bar. Cool, so actually let's go to the 1 minute. So what you'll see is, originally when I woke up, I was following this idea. So price comes in here, we get a sweep of liquidity, right? So it shows that BFIs are taking liquidity and moving down aggressively. And then we get an MS, which is just a momentum shift or a market shift. So it's basically the market shifting from bullish, so this is your bullish range, to then now we shift bearish. And we also see an exchange of orders. So you can see there's an order block here, right? What's a typical order block supposed to do? It's supposed to go higher. But if it doesn't go higher and it fails to go higher and then it goes lower, this becomes a new order block with a lot of confluences behind it because there was an exchange of orders. BFIs exchanged buy orders for these sell orders, and then you see momentum. So I had this as my next level. So I had here, and then what you see is price comes in. Again, we sweep liquidity, and then we rip to the downside. And that's one of the big things for me is if we take liquidity and then we run, it shows me that this is our new movement of where I want to be looking at the range. And so I was looking here, but then you can see I was looking for like a 15-second confirmation, which we don't get. Price just blast through it. So I was like, okay, well, what could this be? Okay, this is what I was talking about earlier about you have to understand how the market moves, right? The market starts on a lower time frame, so like a 1 minute, and then that trend turns into the 5 minute, the 15 minute, the 1 hour, the 4 hour, the daily. So how does the trend start? Well, it starts in the 1 hour, or sorry, the 1 minute. So what happens is you'll see this, right? And then you'll see this. Eventually, this 1 minute trend is going to end. Why? Because if you look at this on the 5 minute, all this looks like is this. And eventually, we're going to need a pullback, right? And we're going to pull back, and then we're going to head lower. But for that to pull back, what has to happen on the 1 minute? The 1 minute has to turn bullish. So the 1 minute turns bullish. You can see we turn bullish here. And that can get a lot of people caught out. They're like, okay, we're going long now. I'm going to start looking for buys off at this level. But you have to remember, what's the higher time frame showing? The 15 minutes bearish. We just tapped into a strong 15-minute zone. We're seeing momentum. And then again, what is this? This is just a pullback on the 15-minute or the 5 minute, right? To do this and then head lower. So that's what I was trying to play. So what happens is price comes in, taps this zone, right? This is the buy before the sell. That's what an order block is. It's a buy before the sell. It's a little bit clearer on the 5 minute. You can see it's this 5 minute bullish candle that then causes this break. So this is the origin of the move. And so what happens is price comes back in, and then we see momentum immediately, which is a really good sign. That's something you want to look for. So you'll see momentum, right? Price comes in, taps this bullish order block. Now, again, if price was to go higher, right, and continue this 1 minute bullish trend, it should continue from here, but it doesn't. We come in, interact, buy orders, then turn into sell orders, and then we move to the downside. And so what you'll see is, okay, cool. So where is my buy to sell? So my buy to sell is here, buy before the sell that causes the break of structure. And you're like, okay, cool, that's my order block. So you place an order there, right? So an order is placed right at the open, stop above. You could be conservative and put about 3 pips. I just put 2.5. And then you see price comes in, taps the zone, and then rips immediately. And then I take my partial at 1 to 4. This is just part of my rules. I always take 1 to 4, 25% off, and then price goes down to hit 1 to 12. So this is a beautiful trade and a beautiful understanding of how to draw structure and how to understand how to identify trend, how to identify structure. Now, again, I'll go more into depth in a future videos about basically understanding the interaction of these two, why this is a really important order block. Same thing with this one. Why are these really important? I'll go into that because, again, it has to do with the interaction of buyers to sellers, but it's just something I'll go into in future videos. But for now, just focus on what I said earlier about identifying proper trend, not getting caught out thinking that, okay, price is now bullish here because it's not bullish. And again, if we're bearish and we're to continue this bearish trend, and price comes up here, what is the next likely thing to happen? It's to take out the low. That's why my target was below this low. So below the low was my target. And it also lines up with what? It lines up with our 4-hour idea. What was the 4-hour idea? Was for price to go higher. But before price goes higher, because there's a lot of momentum, we want to see something specific and see something clear. Does this look like typical price action that you see when price wants to reverse and go higher? No. What this does, right? Liquidity built, we sweep liquidity, we tap into a refined zone over here, right? This zone had a lot of momentum, caused a break of structure, things like that. So yeah, what do you see? Okay, cool. So then tomorrow we could look for potential buys. If we start seeing order flow shift, we could look for buys. And that's basically what I'm trying to say. So yeah, if you're having trouble following trend and figuring out market structure, hopefully this video helped you. If you have any questions, just leave them in the comments, and hope you have a good day.